actually kind of a new thing that we're going to start doing here. So we're just going to use the market summary from TradingView to just talk about where we roughly are in the markets. So looking at the S&P 500 index, we see that we are up a moderate 20 points today. NASDAQ up 52, Dow up 264. So again, very, very moderate gains, not seeing a massive sell-off continue throughout the day. And this was slightly to be expected. And of course, this was my feeling as we concluded our analysis. I was very hesitant at looking at these very large directional positions to the downside. I was very hesitant about asserting that we had broken and that we were going to progress further. In fact, my overall analysis, and the premium members will note this due to the lack of any swing trades that were called to short BTC to the downside, was that we weren't in position. When the swing shorts were still off of the table, right? We were not there yet. And we see that today because we have had a little bit of an upsurge in almost all of the markets. Prices have bounced back up a little bit. When we look at the major indices for some direction here, it's not very indicative. This does lean more bearish than bullish to me because it does suggest, as we have been reporting on and obviously as we have observed, that we are seeing this massive influx of retail traders into the markets, and they are extremely bullish. They are buying into the froth. Of course, we've talked about Hertz, we've talked about Boeing Airlines, all of these retail investors, basically buying the shares that hedge funds and institutional investors are offloading at these prices. And they're largely being left to hold the bag. Now, there's another element to this too, of course, which is that the market can remain irrational far longer than you can remain solvent, which is an old adage when it comes to trading. And with the Fed engaged in massive quantitative easing, if you want to review Jerome Powell's announcement yesterday, and remember, Jerome Powell didn't always used to do this. Now there's roughly like a meeting once a month. Sometimes it feels like once a week. When they used to do, the OMC meeting, the FOMC meeting, it would just be once a month where they made some sort of announcement, and it was generally benign. But now they feel the need, and if you guys watched the interest rate announcement, Jerome Powell's announcement yesterday, it's really sad to see. I've been talking about this for a while as we move into the later stages of the dollar standard, as we begin to see the competition that's rising up from what will replace the dollar standard moving forward, which is some form of central bank digital currency. That will be the next monetary standard that we go to worldwide. And overall, the rise of populism across the world is a natural progression through late stage empire behavior. It always happens. And we're certainly seeing that across the major developed nations. And I feel that due to that, and due to the kind of internal conflict that we're seeing pretty much worldwide, a very likely route forward is that we do see a descent into a little bit of tribalism and push away from globalism for just a little bit. For example, I think Brexit is a good indication of this, and Greece is a good indication of this, and what we're seeing in the United States right now is a good indication of this, that this is likely the trend that we're going to see moving forward, like more nations pulling away from the Eurozone. We have autonomous zone in Seattle now, and it just shows the sentiment of kind of the world as we move forward, which is to pull away from the global system, right, and to cluster. So my thesis based on that is that what we will likely see moving forward, nations move toward their own central bank digital currencies and attempt a kind of a distancing away from a real international monetary standard. Obviously, for the longest time, it was the gold standard, and then following World War II, we went to Bretton Woods, and then we went off Bretton Woods and went to just the dollar standard. Both for Bretton Woods and the dollar standard, there was no reserve ratio, so the United States was free to commit usury and just print money, which debases the currency, and that leads us to where we are right now. So I think that a very likely scenario moving forward is that initially we will see individual nations utilize their own central bank digital currencies and attempt to establish their own independent monetary standard, and that there won't really be a hard global monetary standard, even though the monetary standard that we have right now globally is very soft, but still, it's something. However, that will, as we can obviously see from individual examples, that does make trade very, very difficult, right? And it actually does not improve the life of the citizens. It is far easier to import cheaper goods and services from other countries that can export them. So global trade is generally good. That will be an impetus to push towards some global standard. And obviously, you can view this in a different light, which is that you have, with the collapse of the dollar standard worldwide, you're going to see individual nations compete for which central bank digital currency rises to supremacy. Obviously, we could bet on China's DCEP because that's the first out of the gate. They had the first mover advantage with this in a very ambitious, brick and road program where they want to spread this around. So that is certainly a possibility. We could certainly see that become the monetary standard. There are issues with that as well, due to kind of the differing philosophies between East and West, and the fact that Western economic systems have been a little bit more dominant over the last several hundred years with global monetary standards. Having said that, so let's just go back. Obviously, the fact that the Fed is on money printing jubilee. So reviewing the FOMC yesterday, it's very, very clear that the Federal Reserve is not in any way, shape, or form interested in raising interest rates for whatever reason, for whatever purpose. You can very clearly take away from Jerome Powell's comments and from the decisions of the Federal Reserve Bank that there is nothing, really, no data that could be put in front of them that would incentivize them to raise interest rates. They declared yesterday that they have dismissed of the idea that there's some correlation between low and high unemployment and interest rates. And now we're going to have high unemployment and low interest rates, which is kind of the worst possible thing that you can have moving forward for an economy here in America. That is going to be the thing. 40 million jobs have been destroyed due to this response. And I think that's going to continue. I think that things are going to be relatively difficult moving forward, which sets up opportunities, right? Every tragedy is an opportunity if you have a long enough time horizon. And I think those opportunities will go to those who are forward thinking, long thinking, and pick the winners. Pick the things that they believe in, pick the things that are sustainable. Obvious choices, gold, silver, and Bitcoin. Don't rule out things like Ethereum and DeFi, of course, because those have a high probability to solve real world problems. And they're interesting products, interesting systems. Again, this is Friday, so we're just philosophizing a little bit, just kind of summarizing our thoughts on the market before we get into the charts. That's very unfortunate to see. So the Fed is going to continue printing money. They've talked about another round of stimulus in Q3. So I cannot rule out the fact that the market continues to go up. People like, hard money advocates and gold bugs and people like myself, honestly, have been worried about a market collapse and dollar collapse for 5 years now. Listening to Robert Kiyosaki's podcast the other day, one thing that he didn't predict, for example, was the introduction of quantitative easing and ZIRP, right? Zero interest rate policy. So certainly the market can remain irrational. And there's another reason, of course, why the market is getting bid up, why we're not seeing the stock market crash when we know that the dollar is going to collapse. And the reason why is because all of that liquidity in US dollars needs to go somewhere. There's not a single large scale investor right now, in my opinion, that doesn't understand that the dollar is on the ropes. And they do not want to hold their wealth in dollars. It is very simple mathematics. If you are holding billions of dollars in USD and you don't have that actively invested somewhere to outpace inflation, and you know that $2 trillion just got injected into the monetary system, you know that your purchasing power is going to be eroded if you hold on to that in the form of USD. You need to put that somewhere. It's going into the asset. It's going to the equities market. So the Fed is directly creating and inflating a massive asset bubble, right? This has been talked about in a lot of books, kind of the everything bubble. And it is going to pop in some point. And we saw kind of the first pop, the pin was COVID. The bubble, the asset bubble, the asset class, the stock market is a bubble in search of a pin. That pin in March was COVID. And what did the Fed come in and do? They blew that balloon right back on up with quantitative easing, with the CARES Act and everything that came from that. And, I've talked about before, I don't think that we're going to see a stop of this direct stimulus to individuals, particularly here in the United States. I think this is going to morph into some form of UBI because the money simply is not getting to individuals, right? Even if the government wanted to distribute money in a realistic fashion to help people out, cover goods and needs and services because they've been unemployed or for whatever reason because of economic hardship, the way that the Federal Reserve Bank is doing this is by giving money to commercial banks, and commercial banks are purchasing assets with it. So certainly some of that money is being given out in the form of loans, and this can be good and beneficial for small businesses. But for a lot of individuals, right, particularly individuals who are hurting right now and who are unemployed, the United States government is forced to give direct stimulus to individuals. And I don't think that's going to stop. In fact, I think that what we're likely going to see is some justification to increase that or progress that moving forward. But for whatever reason, I don't think that's going to stop. And this also happened, right? We can look to the end of Rome for this as well. We can look to the end of Athens for this as well. We can look to a lot of historical examples. Again, this is all late stage empire behavior, right? All of this has happened before, time and time again throughout history. We keep repeating the same mistakes. It gets to the point where the currency has been debased so much that the government, the sovereign, is forced to give direct support to the lower class, to the middle class. Rome did this in the form of bread and free sport. America is doing this in the form of stimulus checks, right? And that's not going to stop. Not to be doom and gloom. This sets up an amazing wealth transference opportunity, right? So for those who kind of have the patience and foresight and the ability to invest, to understand the markets, to escape the volatility, to harness the volatility and use it to their favor, I don't think there's been a better time to be a trader and take control of your finances. If you have your money sitting in some 401k that is being managed by some firm that has a bull-only mentality due to the last 50, 60, 70 years of the stock market always goes up, stonks always go up mentality, I think you're playing a dangerous game. I think if you trust those individuals, if you trust the Federal Reserve Bank, if you trust honestly, the government right now with your financial future, knowing that they've bankrupted Social Security, knowing that they've bankrupted almost every single deposit on account with the Treasury and replaced them with IOUs. If you understand that the dollars that you're circulating right now are IOUs, if you understand that America is essentially a broke country living on credit, we import almost all of our goods, right? So we accept goods and services from other countries and we give them worthless paper in return. That's going to stop. It's going to end at some point in time. All these dollars that we've exported to other countries, they're going to come home to roost. And if you're not seeing the inflation now, it will happen then. Things happen quickly. The center cannot hold. If you've ever been in a company or any business that's ever failed, if you've ever been in a relationship that's failed, you know this to be the case. And, things are fine, things are troubled, things are on the ropes, things aren't going well. But, you kind of continue on like everything's fine until like the breaking point. And then everything goes from this is normal to 180 like in a day or a week or a month. It happens very, very quickly. Things collapse very, very quickly. And we can see this, the single largest market correction in a single day back in March. And the currency crisis is going to be just like that, right? People saying, well, we haven't seen it. I can't see evidence of it. I can't see signs of it. The impact will happen very quickly. These are cascading events. It's very easy to look at the markets right now, even in cryptocurrency, right? It's very easy to look at the Bitcoin chart right now and feel either extremely bearish or extremely bullish, right? There is a larger thread here, right? And we're going to get into trading because, of course, I'm an active trader. This is my source of active income. But I'm also an investor, and I also live in this world just like you do. There is a very important narrative here that I believe in very firmly, which is we're at a very important time where if you want to come out the other side of this successfully, you need to have control of your finances. Bitcoin allows you to do that via the public-private key system. Physical gold and silver allow you to do that. Stocks do to some degree as well if you invest in good stocks. There are good companies out there. There are great companies out there. I have a dividend stock portfolio. I don't plan on dumping that in good, high-quality companies that also will weather the storm regardless of however they are revaluated monetarily. Those aren't going to go anywhere, right? McDonald's, Coca-Cola, Emerson, Johnson & Johnson, those companies aren't going anywhere. They're good, high-quality companies that have good management. That's not set in stone. There could be calamities. But there are certain ways to take advantage and take control of your finances. And again, a lot of individuals watching this. Obviously, we have just thousands and thousands of people who come to watch the show and engage in the community from all different walks of life. And that's really beautiful as well. But from my experience with the investors that approach us, right, you're either relatively new to investing and you're looking to educate yourself and build yourself up the right model and tool set and psychology and mentality to be successful for a lifetime moving forward, which is what we specialize in the course. Or alternatively, you are, somebody who's a little older and maybe has accrued some wealth and you don't know what to do with it. For both of those categories, if you fit into that, I think it's absolutely imperative at the end of the day, you do your research, you study your history, you look at what's going on in the world, and you take control of your finances.